One of the things I'm most amazed at is how little time people spend working on their investments. I mean, it's like the most important thing that we need to sustain us in life is money, right? And especially when you can't work for it anymore when you're retiring and when you want to set up a lifestyle for yourself. So I'm going to talk about how I help my 6 and 7 figure investors play offense and defense, but we're going to focus on the offense in this short video. So stay tuned. I help 6 and 7 figure investors play offense and defense so they can make money and have enough to retire, or they can multiply and compound their money into 7 and 8 figure estates. One of the things I'm most amazed is when I meet people who are not my clients, who have been subjected to the traditional Wall Street gobbledygook, right? About how to invest and diversify and put your money into ETFs and just let it kind of grow and make, your 6 or 7% a year and just be safe. I realize that is, it's the predominant wisdom on Wall Street, but unfortunately, it's the wrong wisdom. It's not even wisdom at all. And so what you've got to understand is there are a lot of factors at play here. One of the first factors that you have to recognize is the effect of inflation. And so if you're not playing offense to stay ahead of inflation, not just the fact that you're playing defense and not losing money, but you've got to play offense to not just stay ahead of inflation, but to compound at a rate that stays ahead of inflation so that when your dollar becomes even more worthless in the future, it's already lost 99% of its value in the last 100 years, by the way. When it becomes even more worthless and it continues to lose even more value, at least you're gaining value by outpacing inflation. Now, let me just talk a little bit about inflation. I want you to think about the last 2 years. The last 2 years, we've printed more money in this country than we've printed in the entire existence of the country. And so it's at a rate of about 25% a year right now. At least they're just printing money and they're creating programs, and they call it infrastructure, and they create government agencies, and they increase the payrolls of the IRS, and they are increasing taxes, and all of these things are leading to this gigantic inflationary effect. And so as they're printing this money, think about it. If they're printing 25% year over year of money, and I think it'll kind of get dialed back to we're going to print money every year from now and into the future. We're going to be printing between 10, 12, 15% a year. Well, once that money starts to revolve and go through the economy, I call it the velocity of money, that money becomes inflationary. Because think about it. You got some extra money burning a hole in your pocket that you just got for free from the government or for sitting on your butt. And so you're going to say, well, you know what? I want the new iPhone 12. Oh, so it's $1,200. No big deal. And so you're going to go spend that money. Well, that's going to keep people employed at the iPhone shop, but not just at the regular rate. They're going to want more money because things are getting more expensive. And so we're going to give them the $15 an hour, which either means that, Apple has to charge more for their phone, or they have to cut back on a few of those people and run that business with maybe some more iPads. And so in the short term, they're going to hire more people. And that money is going to start to get circulated through the economy, which means your ice cream is going to go from $3 a scoop to $6 a scoop or $5 a scoop. And I talk about inflation a lot because I think it's so important. We realize, or we neglect to realize, how important an effect it has on us. And so if you think about what gas was in let's call it 2020 or even 2019, it was about half the price, or maybe 2/3 the price of what it is now. So gas has gone up about 50%. Well, that's not 3% a year like the government tells us inflation is 3% a year. Gas is a big deal. Like if you were spending $30 a year or a tank to fill up, and now you're spending $50 to fill up, or $45, that makes a big difference if you fill up 4 times a month, if you're a family of 4 living on a fixed income, or just struggling to get by. So a lot of people are going to, a lot of the politicians are going to tell us, don't worry, inflation's fine. Inflation is what we need. We're going to inflate our way out of this. The problem is it's all fake, right? So if you have a $100,000 house and it inflates up by 50% over the next, say, 3 or 4 years, whatever it is, and they increase the capital gains tax on it. It's really fake money. Like you got an extra 50%, but it gets taxed twice as much. So you end up losing money. All right. So I'm getting off on a tangent here. So what you've got to do is you've got to play offense. You've got to make more money than the average. So I have this saying, don't be average, right? Because I don't wake up in the morning going, oh, I can't wait to be average today. No, I want to be excellent. I want to excel. I want to be way above average, outstanding. And when you have a standard like that, you set yourself up for a really cool life. And if you're just accepting mediocrity, then you're just like everybody else. And if you're like everybody else, you're not going to get ahead, right? Getting ahead, the definition of it means you're not like everybody else. Now, you're going to take a risk, and everybody's afraid of risks. And some people get left behind with risks, right? They don't take the right risk. They take miscalculated risks. But when you do take a risk, you at least have a chance of exceeding, excelling. And so if you're making 6 and 7 and 8% on your portfolio because you've got some bonds and you've got some ETFs that are making you a nice 2% dividend and it's all cushy. But if you're making 2, 3, 4% on fixed income, think about it. And inflation's running at 12%, 15%. I don't care if they tell you it's 3.1. You know in your pocketbook it is not 3.1, right? You know that boats are more expensive, even if you're on the luxury side like some of my clients. You know that cars are more expensive. They're more scarce. Even used cars have gone up in value, right? Housing prices have gone up in value. You know in your heart that inflation ain't no 3%. You know if you looked at the value of your house last year, it's not up 3%. It's probably up 10, right? And it's going to go more because they're going to be printing more money. And so if you're not staying ahead of that, just do the math, guys. Like if you're at 15% inflation and you're only making 7% return in your portfolio, you're losing 8% a year. And when you compound that 8% a year, you are getting absolutely crushed. So you've got to stay ahead. You've got to take chances, which is what they want you to do. That's why they pay 0 interest rates on savings, CDs, money markets, things like that. There's no incentive to save. So you've got to be in assets, whether those assets are real estate or those assets are hard assets or whether they're tangible, intangible assets. You've got to be somewhere where you're making more than 6 or 7% on an annual basis. Yeah, you might have to take some more chances, as they say. But I'd rather take some chances and get ahead of inflation than know for sure that my dollar is going down in value. So what do you do? Well, you've got to find some programs that are a little bit outside the mainstream. Now, I have one. There's lots of other ones. I have a program called the Cash Flow Machine, Wealth Investors Club. We help investors make 1% a week or 2% a month, depending on how much risk you want to take. And, that kind of compounding adds up over time. We don't tell people we're going to make 6 or 7%. We tell people we're going to target 1% a month. 1% a month, if you do the math, 2% a month, if you do the math, is 24% a year, right? That's better than 7. But we also have a program that targets 1% a week. Well, that's 50 weeks in a year, let's say. It's 50% a year. Last year, we did way better than that. And so when you have a couple of years where you're doing way better than 7%, those years start to compound. Doesn't matter then what happens with inflation. Doesn't matter then what happens with your buying power because you're staying ahead of it. So it's really critically important for you to take a good, strong look at your assets. Make a plan and decide how you're going to be, taking, I don't want to say more risk because I don't believe that investing prudently is risky. I think if you have a plan, you have a system, you have rules, you take the emotion out of it, you're not just guessing, then I think you're not taking a huge amount of risk. Now, as long as you have risk management parameters. I have a saying, never give up your power in your health, your wealth, or your time. And the more information that you have and the more knowledgeable you are and the more systematic you are, the less risk you take because you have the power. If you give up your power to some salesman or attorney on Wall Street, there's nothing wrong with attorneys and salesmen. Don't get me wrong. I mean, they kind of make this Western world go around, right? Nothing happens until something's sold. But if a salesperson is running your portfolio and not a trained portfolio manager, which very few people are, right, by the way. I don't care how many letters they have after their name. I got tons of letters after my name, by the way. Doesn't make me a good portfolio manager. What makes me a good portfolio manager? 44 years of experience in gaining and losing money and running trading and figuring out systems and testing, right? And I teach all of that in my cash flow machine system. I teach that in our mastermind groups. And so if you want to get ahead, you've got to get ahead. right? You've got to stay ahead. You've got to beat inflation. You got to crush it, right? Because they're giving you this opportunity to be in assets right now because they're printing all this money. The only safe haven is to be in assets. It's not to be saving money and being safe, because that money is becoming worth less and less and less at a much faster rate. So I hope you feel my passion when it comes to how much offense you need to be playing. You need to be playing offense. You need to be focusing on it, because if you don't focus on it, you're going to be left with a lot less buying power when it comes to your later years where you're really going to need it.
How can we help you? 5 ways. First, subscribe to our channel and click the notification bell below to make sure you get our new video the minute it comes out. Second, get a copy of my book, Hacking Money, and you'll learn a system for creating wealth through passive income so that you can build the lifestyle of your dreams. Click where it says book below. Third, if you want to hit the ground running, or if you want to learn how to invest from someone with over 44 years of investing success, click the products and programs link below. Fourth, if you want to accelerate your path to increase your wealth, consider joining one of my ecosystems. I have mentorships and mastermind programs for learning that are practically guaranteed to make you a successful investor. Or if you want to travel the world and learn from me and other multimillionaires on the path to greatness, you should consider joining my elite mastermind group. Fifth, if you want some help right now because you have a burning issue, you need something solved, you want to create massive passive income, or you want to accelerate your results in your investments, or maybe you just want personalized mentorship to build the lifestyle of your dreams, we can help. Maybe you're a multimillionaire who just wants someone else to handle some of your investing decisions and you want to invest in one of my funds. Whatever it is for you, click on the link below where it says Become a Client. All those links are below. You create your world, nobody else. And remember, never give up your power in your health, your wealth, or your time.